Right now, you are probably watching the mainstream news tell you that the economy is stabilizing, that inflation is cooling down, and that the Federal Reserve has successfully engineered a soft landing. The anchors are smiling, the stock market is hitting new highs, and Washington is taking a victory lap. But while the cameras are rolling and the public is celebrating a slight drop in the consumer price index, the three largest banks on Wall Street have quietly shifted billions of dollars out of cash and into hard assets. Welcome to Prism News. I am your host, and today we are tearing down the facade. What you are experiencing right now is not an economic recovery. It is the early stages of the greatest wealth transfer in modern human history. To understand what is really happening to your bank account, we need to look past the political talking points and examine the raw data. According to recent reports from Bloomberg and the Federal Reserve, the United States national debt has crossed $34 trillion. Yet the mainstream narrative continues to focus on fractional percentage drops in inflation. This is a classic misdirection. Inflation is not a mysterious economic weather event. It is a mathematical certainty and a stealth tax. When the government prints trillions of dollars out of thin air to fund domestic deficits and foreign geopolitical shifts, the purchasing power of every single dollar in your wallet is diluted. The elite understand this game theory perfectly. They know that inflation transfers wealth from the middle class who hold their savings in cash to the asset class who hold real estate, equities, and commodities. The Federal Reserve holding interest rates steady around 5.25% is not a sign of victory. It is a desperate balancing act. If they lower rates, inflation explodes again. If they raise them, the entire system fractures. You are being told to trust the process while institutional investors are actively building lifeboats. But the illusion of domestic stability is only the first layer of this onion. What is happening inside the United States is deeply connected to a massive tectonic shift happening oceans away. A shift that threatens the very foundation of the American financial empire. If you think the erosion of your purchasing power is purely a domestic issue, you are missing the biggest geopolitical chess move of the 21st century. For 50 years, the United States dollar has been the undisputed king of global finance. This dominance was built on a simple premise. If you wanted to buy energy on the global market, you had to use American dollars. This forced every nation on Earth to hold our currency, giving Washington an unprecedented level of financial leverage. But the rules of the game are being rewritten right now. The bloc of nations known as BRICS, which includes Brazil, Russia, India, China, and South Africa, has been actively executing a strategy of de-dollarization. According to the International Monetary Fund, the share of United States dollar reserves held by global central banks has dropped to its lowest level in over 2 decades. This is not a conspiracy theory. This is documented financial data. The World Gold Council recently reported that central banks around the world have been buying gold at a record-breaking pace not seen since 1967. Why are foreign governments hoarding physical gold and bypassing the dollar system? Because they have seen how the Western financial system can be weaponized. When global supply chains and financial networks are used as leverage during geopolitical shifts, other nations take notes. They are building alternative payment systems to shield themselves. When global demand for the dollar drops, those trillions of dollars circulating overseas eventually come flooding back into the United States economy. When an ocean of currency chases the exact same amount of goods, domestic prices skyrocket. This means that the rising cost of your groceries is directly tied to the geopolitical alliances forming in Asia and the Middle East. But losing the currency monopoly is just one front of this silent conflict. There is another battle raging right now, and it is not being fought over oil or gold. It is being fought over something much smaller, but infinitely more powerful, and it controls literally every aspect of your modern life. Let us pivot from the money supply to the actual engine of the modern world. If you want to know who will control the global economy for the next 50 years, you do not look at who has the most oil. You look at who controls the silicon. We are talking about the semiconductor industry. The trillion-dollar choke point that has Washington and Beijing locked in a high-stakes technological standoff. Semiconductors are the brains inside everything, from your smartphone and your car to advanced medical equipment and defense systems. According to the Wall Street Journal and Reuters, the current geopolitical landscape has forced the United States to implement strict export controls on advanced chip manufacturing equipment. The goal is to restrict the flow of high-end technology to strategic competitors. But in game theory, every action triggers an equal or greater reaction. The vast majority of the world's most advanced microchips are manufactured on a single island, Taiwan. If any geopolitical friction disrupts the supply chain coming out of the Taiwan Semiconductor Manufacturing Company, the global economy would face an immediate freeze. We are talking about assembly lines halting worldwide and the cost of basic electronics doubling or tripling overnight. This is why billions of dollars are suddenly being poured into building semiconductor plants on American soil. It is a race against time. However, building a chip foundry is not like opening a fast food restaurant. It takes years of development, highly specialized labor, and hundreds of billions of dollars in capital. In the meantime, the supply chain remains incredibly fragile. This technological arms race is driving up the cost of production across every sector. When manufacturers pay more for the silicon brains of their products, they pass that cost directly down to you, the consumer. This tech war is silently acting as another inflationary pressure on your household budget. But while everyone is looking across the Pacific Ocean at the chip war, an entirely different crisis is brewing right in your own backyard. A financial time bomb that the media is largely ignoring. We have talked about the Federal Reserve and global supply chains, but now it is time to look at the streets of your own city. Since the global health events of 2020 fundamentally changed how the world works, there has been a massive shift toward remote labor. It sounds like a victory for work-life balance, but it has created a catastrophic financial void. Downtowns across America are facing an unprecedented crisis. Let me pause right here and ask you directly. Think about your own city, or the nearest major metropolitan area. How many empty office buildings or closed storefronts have you driven past lately? Drop a comment below right now and tell me your city and what you are seeing on the ground. Your local insights are often faster and more accurate than government data. Here's the terrifying reality that the major networks are glossing over. Commercial real estate in the United States is sitting on a mountain of debt. According to financial analysts, roughly $1.5 trillion in commercial mortgage debt is coming due for refinancing within the next couple of years. These loans were taken out when interest rates were near zero. Now these building owners have to refinance at rates closer to 6 or 7%. But how do you refinance a building that is 50% empty? The answer is, you cannot. Many property owners are simply handing the keys back to the banks and walking away. And who holds the majority of these commercial real estate loans? It is not the massive trillion-dollar Wall Street giants. It is the small and mid-sized regional banks, the very banks that hold the deposits for local businesses and middle-class families. If a wave of commercial defaults wipes out the capital reserves of these regional institutions, we could see a banking correction that makes recent financial hiccups look like a warm-up act. The system is incredibly interconnected. A vacant office building in downtown Chicago or San Francisco directly threatens the stability of the bank holding your savings. But how is Washington preparing for this domestic financial storm? They are doing what they always do. They are doubling down on the debt charade. And in the next segment, we are going to expose exactly how the politicians on Capitol Hill are using a mathematical illusion to keep the game going while leaving you with the bill. Let us pull the curtain back on the grand stage of Washington District of Columbia and expose the ultimate financial illusion. If you watch the mainstream broadcasts, you will see endless debates about debt ceilings, government shutdowns, and fiscal responsibility. Politicians from both sides of the aisle stand at the podium and promise to rein in spending. But if you look at the raw data from the Congressional Budget Office and the United States Treasury Department, you will see a completely different reality. The national debt is not just growing, it is accelerating at a terrifying velocity. We are currently adding roughly $1 trillion to the national debt every 100 days. Think about the sheer magnitude of that math. This level of deficit spending during a period of relative domestic peace is unprecedented in the history of global empires. So why is the stock market still reaching all-time highs while the underlying debt structure is fracturing? This is the Washington debt charade. When the government runs a massive deficit, it has to issue bonds to borrow that money. Historically, foreign nations were happy to buy American debt. But as we discussed earlier, with the geopolitical shifts happening around the world, foreign central banks are stepping back. They are buying gold instead of treasury bonds. So, who is left to buy the debt? The answer is domestic institutions, and ultimately, the Federal Reserve. This massive injection of government spending acts as an artificial stimulant for the stock market. It pumps capital into defense contractors, technology firms, and infrastructure giants. The politicians get to claim the economy is booming because the stock index is green, but it is a boom built entirely on borrowed time. They are using your future purchasing power to finance today's political victories. And the most dangerous part of this game theory is that it is fundamentally unsustainable. Eventually, the interest payments on this mountain of debt will consume the entire national budget. Before we move on, I want you to think about this. If a private citizen ran their household budget the way Washington runs the national treasury, they would be in federal prison for accounting fraud. But the government has a printing press, and what they are printing is directly tied to the next massive global shift, which revolves around the physical building blocks of the future. We have talked about paper money and silicon chips, but now we must turn our attention to the physical earth. You cannot print a barrel of oil. You cannot print a ton of copper. And you certainly cannot print rare earth minerals. We are currently entering what financial analysts call a commodity supercycle. This is a prolonged period where the demand for raw materials massively outstrips the available global supply. The mainstream media loves to talk about the transition to green energy and electric vehicles. They paint a picture of a clean, automated future. But they conveniently leave out the brutal geopolitical reality of what it takes to build that future. According to industry reports from groups like Bloomberg New Energy Finance, manufacturing a single electric vehicle battery requires hundreds of pounds of mined materials like lithium, cobalt, and graphite. And here is the fact that should make every American policymaker lose sleep at night. While the United States spent the last 2 decades focused on the Middle East, our geopolitical competitors quietly secured the supply chains for the future. Data shows that a single strategic competitor currently controls roughly 80% of the world's rare earth processing capacity. These are the exact minerals required for advanced military guidance systems, fighter jets, and renewable energy grids. This is not just a trade imbalance. It is a massive vulnerability in national security. At the same time, the traditional energy markets are undergoing a radical transformation. With ongoing geopolitical friction in the Middle East and Eastern Europe, the flow of oil and natural gas is being rerouted. Nations are hoarding resources and signing long-term bilateral trade agreements outside of the dollar system. When the cost of energy goes up, the cost of everything else goes up. It costs more fuel to mine the metals, more fuel to run the factories, and more fuel to ship the goods to your local distribution center. The era of cheap, abundant resources that fueled the American economic miracle for the last 40 years is officially over. We are entering an era of resource scarcity and strategic stockpiling. And the financial burden of this new era is about to fall squarely on the shoulders of the American public. So how does this massive geopolitical and financial puzzle affect your kitchen table? We have connected the dots from the Federal Reserve boardrooms to the semiconductor plants in Asia and the lithium mines in Africa. Now let us look at the final destination of all these global forces, your wallet. This brings us to the middle-class wealth squeeze. You are living through a silent confiscation of your economic mobility. If you feel like you are working harder than ever just to stay in the exact same place, you are not crazy, and you are not alone. The official inflation metrics tell you that prices are rising by 3 or 4% a year. But the official metrics are heavily manipulated. They exclude the true cost of housing, energy, and food by constantly changing the basket of goods they measure. If we measured inflation today using the exact same metrics the government used in the 1980s, the actual inflation rate would be closer to double digits. This is why there is such a massive disconnect between the economic experts on television and the reality faced by everyday Americans. The elites are looking at inflated stock portfolios and telling you the economy is robust. You are looking at your grocery receipt, your utility bill, and your insurance premiums and wondering how you are going to make it to the end of the month. The system is functioning exactly as it was designed to function. By keeping interest rates elevated to fight inflation, the central bank makes it incredibly expensive for average citizens to buy a home or finance a vehicle. At the same time, the massive government deficit spending ensures that the prices of essential goods will never return to their previous levels. It is a pincer movement. Your wages are being eroded by inflation on one side, and your ability to borrow is being crushed by high interest rates on the other. The middle class, the traditional engine of the American dream, is being systematically hollowed out. But here at Prism News, we do not just present the problem. We believe that understanding the macroeconomic chessboard is the first and most crucial step in defending yourself against it. We have covered a massive amount of ground today. From the hidden movements of Wall Street to the de-dollarization efforts of the BRICS nations, the fragile semiconductor supply chain, the commercial real estate debt bomb, and the grand illusion of Washington's fiscal policy. The mainstream media wants you to view these events as isolated incidents, as random breaking news alerts that have no connection to each other. But you now know the truth. You now have the framework to see the invisible strings pulling the global economy. So what is the verdict? How do you navigate a system that seems rigged against the individual? While we do not give direct financial advice, the historical playbook for surviving a great wealth transfer is clear. The wealthy do not hold their purchasing power in fiat currency during periods of structural inflation. They position themselves in hard assets, things that have intrinsic value and cannot be printed by a central bank. They focus on acquiring productive land, vital commodities, and businesses that provide essential services regardless of the economic weather. The most important asset you can acquire right now is not a stock or a bond. It is independent critical thinking. It is the ability to look past the political theater and analyze the raw data for yourself. The world is transitioning into a new economic paradigm, and the people who understand the rules of this new game will be the ones who thrive. The people who blindly trust the institutional narratives will be the ones left holding the bill. Our mission at Prism News is to make sure you are never caught on the wrong side of history. If this investigation opened your eyes to how the real economy operates, do not let this information stop with you. Hit that subscribe button right now, share this video with someone who needs to hear the truth, and drop your thoughts in the comments below. The algorithm tries to hide this kind of deep dive analysis, so your engagement is the only way we can beat the system together. Until next time, stay vigilant, stay informed, and never stop questioning the narrative. I am your host, and this has been Prism News.